Hi guys, and welcome to my brand new trading ideas on both Ethereum and Fantom. Let's not waste any more time and let's dive straight into it. Before we go over the lower time frame analysis and execution, we obviously need to understand the higher time frame context. And when we look at Ethereum and we have a look at a higher time frame context, I'm still looking at this higher time frame potential PO3 that we are creating on the price of Ethereum, in which we saw accumulation over here. Currently we are potentially within the manipulation phase before we are going to see expansion towards brand new all-time highs. Now that means that if this is the higher time frame context within this manipulation phase that is currently taking place over here, do you want to be looking for shorts? Obviously not. There's a higher probability of a potential deviation of this range low area over here, in which we are going to see a reclaim and a pump towards higher levels. Now when we then switch to the lower time frame and we start having a look at a lower time frame execution over here, what we can see is a few interesting things. What I first really like is the slow grind towards the upside over here, where we are constantly forming more and more pressure towards the upside by forming these higher lows. Now, on the other hand, we can also see that so far this week and also the end of last week, we have seen a strong impulsive move towards the upside. Now, within this impulsive move towards the upside, there were a few interesting things. The first thing that was pretty interesting to me is the fact that over here, Ethereum formed a higher low. Now you might be wondering, okay, but Jip, what's so interesting about a higher low? We see this all the time. While Ethereum was forming a higher low over here, at the exact same time, Bitcoin was forming a lower low on price action. Now, if Bitcoin forms a lower low and Ethereum forms a higher low, this is what we call an SMT divergence. And this indicates a high probability for a potential reliable reversal. So we were seeing this SMT divergence. After that SMT divergence, we saw a strong push towards the upside that gave us a break of structure right over here. Now, why is this a valid break of structure? Analyze a local trend. First off, we were forming higher highs and higher lows. Then we formed a lower low, lower high, and another lower low. And over here we formed a higher high again, breaking through this significant high, but also through this significant high over here. So we have an SMT divergence and a break of structure back towards the upside with a strong impulsive move. And we also have the higher time frame alignment, the higher time frame context that is aligning with our bias, aka the higher time frame PO3 as well. So all in all, we can definitely say that we should prefer to look for long executions and definitely not be looking for potential short executions. Now, if we in that case start looking at a potential execution for a long idea on Ethereum, first off, we always have to determine where other people are getting stopped out, because I always want to enter where other people are getting stopped out. Now, when I zoom into the local price section over here, there's two things that are interesting to me. First off, it's this little consolidation phase and this little break towards the upside over here. Now, why is this interesting to me? Because within this consolidation phase and within this impulse towards the upside, it gave us this fake break of structure. There's lots of people that have been positioning themselves into longs, for example, up on the breakout over here, or even in this consolidation phase over here. Now, where are those people going to place the stop loss of that long position? Beneath the low over here. Because in their opinion, this is the low that started this impulse that gave us this valid break of structure. But they don't realize that it's actually a fake break of structure. But by doing this, they are engineering liquidity beneath the low over here. Now, on the other hand, we can also see this very choppy piece of price action over here. Now, I have taught you guys that if you see choppy price action like this, you always want to look at the extremes of the choppy range. Now, in this case, we have one extreme obviously at the top over here, and we have another right over here at the bottom, which means that by analyzing this choppy piece of price action, I can see that we have liquidity resting over here. I told you guys we are only interested in executing a long if we are going to visit an area where other people are getting stopped out. Now, in my opinion, people will get wrecked hard once we take out this low and once we take out this low. Now, all that we need to look for now is a potential high probability invalidation and a decent RR and a decent target. Now, in order to get a high probability invalidation, we are looking currently at the weekly statistics for Ethereum. And what we can see is that the upper metric, this one right over here, is showcasing a 7.8% chance of the current weekly low to get broken. AKA, there's about a 92% chance of the current weekly low for Ethereum to hold. When we look at the weekly timing statistics, we can see that P1, aka the current weekly low for Ethereum, was put in on Monday, and the current P2, aka the current weekly high, was put in on Tuesday. We can see that the last time that Ethereum did not put in P1 on a Monday was 8 weeks ago. It was on a Wednesday. It was 2 months ago, guys. That's a very, very long time ago. The last time that we put it in on a Tuesday is 22 weeks ago. Thursday 52, Friday 50, and Saturday 25 weeks ago. So this metric is showcasing to us that almost always the weekly low or the weekly high, aka the P1 of the week for Ethereum, gets put in on a Monday. We can see that there's already a 60% chance, a 59% chance for the current weekly P1 to hold based on the timing as well. So that means that the current weekly low over here, based on the weekly timing and distance statistics for Ethereum, is having a very high probability to hold over here. So that now means that we have discovered the area where we want to execute our long after figuring out our bias based off low time frame analysis and the higher time frame context. We have found ourselves a high probability invalidation based off weekly statistics for Ethereum. All that we need to do now is determine the RR based off our main take profit target. Now for our main take profit target, guys, you do not want to be greedy. Yes, I know that the higher time frame context is showcasing towards potential new all-time highs, but we have no certainty with that. We only want to provide a potential take profit target based off what the charts are telling us. And the chart is showcasing a decent range over here, in which we have range pivot 1, range pivot 2, range pivot 3, 4, over here, and range pivot number 5 over here. Now we know that after deviation of the range low, we technically should be visiting the range high over here. Now when we zoom into this range high area, I can see that we have a few untapped highs over here. And what is interesting about these highs when I zoom into them is that we have 2 highs. And we know that we always want to use the second to highest high as our main draw on liquidity. And now we can see that that second to highest high is also exactly aligning with a range high level that is already acting as a magnet for price based off the range theory. So that means that over here we have found ourselves our main take profit target. So now that we have also found our target, guys, for Ethereum, we can also measure the RR. And we can see that if we enter, once we take out the lows over here, we have found ourselves the weekly invalidation beneath the current weekly low, and we have found ourselves our target. We can see that all in all, this potential trading idea for Ethereum offers an RR of over 4.07. Now let's move over to the next chart, which is Fantom. Let's first have a look at the higher time frame context once again. We can see that over here we were in a major downtrend. Now obviously we can see that the downtrend got broken and that we are in a very strong and impulsive uptrend over here, and then we can target potential more buy-side liquidity. Now the higher time frame context over here is super interesting, guys, because what we can see over here, and you need to remember this, is that we have a slow grind to the upside over here that leads to a flush to the downside, and then we start trading back above that high over here again. Now this is one of my favorite continuation patterns. So that means that you can make a screenshot of this slow grind up that leads to a flush to the downside, and then we trade back above that high again. This is exactly what you want to see if you are looking at potential bullish order flow, if you want to see continuation higher. Obviously, when we invert the chart, it would look something like this and works exactly the same to the downside as well. So now this higher time frame context is definitely pointing towards more upside. So that means that we move to the 1 hourly time frame in order to start looking at a potential lower time frame execution. And also over here, guys, what are we looking at over here once again? Slow grind to the upside that leads to a flush to the downside, and then we start trading back above that high again, which means that we have found ourselves already an invalidation over here based off that bullish order flow. Why is this slow grind to the upside followed by this flush to the downside so interesting? Because this slow grind to the upside over here that is giving us the fake break of structure over here and the fake break of structure right over here, we know that these fake break of structures in this slow grind is engineering liquidity to the downside beneath the lows over here. If the price then in an aggressive manner mitigates that liquidity pool and bulls show up and trade the price back above that high again, it means that bulls are in control and then we can start seeking for higher time frame buy side liquidity. Now, what we can see over here, and I want you guys to think about this for a second, what's exactly the thing that we are looking at over here? I've just talked about it as well on Ethereum. I'm going to take a sip of my coffee and I give you guys a few seconds to think about this. What we are looking at over here, guys, is once again an extremely choppy range. Now understand that when you look at choppy price action like this, you are not going to position yourself in this range over here. We are always, and I mean always, going to look at the extreme of that range. That means that we are going to look at potential longs once we take out the range low. Now when we zoom into the 15-minute time frame, we can also see that due to this fake break of structure over here, just imagine the amount of people that FOMO'd into longs upon this aggressive push to the upside. Just imagine the amount of people that FOMO'd into longs on this aggressive move towards the upside. Now, when we get into the mind of the retail trader and they FOMO into a long over here, where are those people going to place their stop loss? Exactly, they're going to place the stop loss beneath the lows over here. So they are going to be providing us with the liquidity that in that case is very interesting. Because the liquidity is aligning around that previous range high area over here for Fantom. So basically, that liquidity is acting as an inducement for the previous range high area over here. And then we can use the range high breakout entry model. We have found ourselves our invalidation over here already based off this very clean piece of price action over here. We have found ourselves our first entry area. We have found ourselves a target based off that higher time frame context. Because when we look at a higher time frame context, we can see that we have plenty of untapped highs right over here. Now, this high is the closest high, so that's our main take profit target. That already offers a decent RR of 1.68, but eventually we can target all of the highs over here that have been building up major liquidity, and we can target new yearly highs for Fantom, where we also have these relative equal highs aligning over here, and now that offers a massive RR of 8.22.